Welcome back to the Market Podcast. Asymmetric info for individual investors. Educational info only, not financial or legal advice. Consult a pro before investing.
Imagine this. The S&P 500, the bedrock of American investing, the index behind trillions in retirement savings, suddenly gets a jolt of Bitcoin's wild energy. Could this be the spark that reshapes how everyday investors maybe unknowingly bet on digital gold?
It's a fascinating question.
Today, we're exploring the profound implications of Block, a company built around Bitcoin from its core, joining this elite club. We will unravel why this could forever change the game for index funds, your portfolio, and perhaps the very future of money itself.
The answer might just redefine what safe investing truly means.
Exactly. We'll delve into the leadership, the innovative business model, the strategic advantages, and the financial strength that propelled Block into such a pivotal position, offering you unique insights into this transformative event.
And this isn't just another company slotting into an index. Block is so deeply interwoven with Bitcoin, its inclusion fundamentally shifts how established financial benchmarks connect with the evolving digital economy. It's a real statement.
A statement about where finance is heading. You called it a profound moment. Let's unpack that. For the everyday investor holding, say, an S&P index fund, how truly transformative is Block's inclusion? What are those immediate ripple effects?
Well, the immediate impact for passive investors is quite significant. Think about it. Billions, maybe trillions eventually, managed by index funds for your retirement, your long-term savings, will now implicitly hold exposure to a company that's deeply fundamentally integrated with Bitcoin.
Without them actively choosing it.
Precisely. When the news broke on July 23, 2025, that Block was replacing Hess, its stock immediately surged by 10%. That reaction alone tells you the market recognizes this isn't business as usual.
A 10% jump is certainly noticeable.
It is, and it's because this is the first time a truly Bitcoin-native entity has entered such a prominent index. So, without even necessarily knowing it, your diversified portfolio just got a new, very dynamic link to the world of digital assets.
That's a fascinating point about unwitting exposure. Historically, the S&P 500 symbolized stability, a safe harbor. But Block's inclusion, with its deep Bitcoin ties, really challenges that traditional notion, doesn't it? How does this reframe what safe investing actually means?
It absolutely shatters the traditional wall between established finance and the Bitcoin economy. What's truly revolutionary here is that Bitcoin's inherent asymmetry, its potential for, let's say, very high upside combined with its known volatility, is now introduced into these so-called safe benchmarks, simply through passive investing.
So it's not the funds buying Bitcoin directly?
No, not at all. It's about gaining exposure through a company that has strategically woven Bitcoin into its very DNA. And we zoom out a bit. This signals a significant maturation for the entire Bitcoin ecosystem.
How so?
It could easily pave the way for more companies built around Bitcoin to be included in major indexes down the line. It normalizes their presence within mainstream finance. Think about Bitcoin's scarcity, that hard cap of 21 million coins. It contrasts sharply with traditional fiat currencies.
A key part of the Bitcoin thesis.
Exactly. That scarcity, coupled with its adoption curve. It reminds many of the internet boom back in the 1990s. Block's inclusion acts as a powerful accelerant for institutional capital inflows. It highlights Bitcoin's fundamental network value and its long-term potential. Essentially, institutional finance isn't just tolerating Bitcoin anymore. Through a company like Block, they're starting to embrace its foundational principles.
That's a compelling parallel to the internet's early days. And at the heart of Block's journey into this elite club are the leaders who envisioned it, particularly its co-founder and CEO, Jack Dorsey. His story is quite unique, moving from co-founding Twitter, now X, to transforming Square into Block in 2021.
And that wasn't just a name change.
Not at all. It was a profound declaration of his deep-rooted passion for decentralization and financial inclusion. It cemented Block's identity as a Bitcoin-first company. His strategic decisions are consistently bold. For instance, committing to reallocate 10% of Block's Bitcoin-related gross profit back into acquiring more Bitcoin.
That's a significant commitment. It forces Wall Street to acknowledge Bitcoin as a legitimate corporate treasury asset. It shows real conviction backed by capital allocation.
Right. And that conviction can fundamentally rewire how mainstream finance perceives and values these digital assets. Dorsey's advocacy for Bitcoin mining hardware, his belief in Bitcoin for economic empowerment. It's all found powerful validation through this S&P 500 inclusion. It's a testament to how his vision directly shaped the company's path.
Dorsey's vision is undeniably the North Star, but the collective strength of his executive team is what translates that vision into success. Take Amrita Ahuja, the CFO. Her background, managing complex financials, including at places like Blizzard Activision, has been crucial for Block's unique balance sheet with its significant Bitcoin holdings.
Especially handling that Bitcoin volatility.
Exactly. She spearheaded adopting fair value accounting for Bitcoin. Instead of just showing the purchase price, they show its current market value. This gives you, the investor, a much clearer, real-time picture of their financial health. That kind of transparency and rigor was undoubtedly key in meeting the S&P 500 criteria.
Makes sense.
Then there's Brian Grassadonia, the ecosystem lead. He was instrumental in making Cash App a leading Bitcoin trading hub. Focusing on seamless features like direct Bitcoin deposits drove huge user adoption and set Block apart.
And Nick Molnar. The Afterpay connection seems important too.
Very much so. As head of sales and former Afterpay leader, his expertise in buy now, pay later broadens Block's consumer reach. It aligns perfectly with Dorsey's vision of Bitcoin for everyday transactions, moving beyond just speculation. These leaders' decisions, Dorsey's hands-on involvement, Ahuja's treasury management fuel growth, and signal Block was ready for S&P scrutiny. Their efforts show how a dedicated Bitcoin-native strategy can profoundly influence market indexes.
And this brings us to that founder-led ethos. Dorsey isn't just a figurehead. He's deeply involved, owning roughly 10% of the company.
Right. He's CEO and chairperson. That founder-led structure often correlates with better long-term performance. While it's not a family business, Dorsey's track record dual successes with Twitter and Block shapes its Bitcoin-native strategy. His hands-on approach positions Block as a leader in Bitcoin adoption.
And critically, his incentives seem aligned with investors.
Meticulously aligned. His compensation is overwhelmingly tied to Block's stock performance, minimal base salary. Equity grants vest based on specific milestones, user growth, and significantly, Bitcoin integration. His goals mirror shareholder goals, fostering long-term thinking.
Which is vital now to the S&P 500.
Absolutely. Founder-led innovation can amplify Bitcoin's mainstream legitimacy, potentially boosting returns through index fund inflows. It tells passive investors their success is tied to the founder's vision and execution.
What's also compelling is the clarity of Block's mission to build technology for economic empowerment.
It's unambiguous. Supported by a vision of an inclusive financial system powered by Bitcoin and open-source innovation. Dorsey's goal is ambitious. Make Bitcoin the native currency of the internet.
And we see that in tangible initiatives.
Yes, like developing a cutting-edge 3-nanometer Bitcoin mining chip. Or the Bitkey self-custody wallet, addressing secure storage. Their products, like Cash App's Bitcoin trading, aim to break down traditional banking barriers.
The culture seems to reflect this too.
It does. A builder mindset, innovation, problem-solving. They embraced remote-first work back in 2020. Core values like ownership and transparency support their Bitcoin objectives. Employees are encouraged to contribute to open-source Bitcoin projects, prioritizing long-term impact.
That culture seems key to their pivot.
It proved remarkably effective during the pivot from purely payments to Bitcoin-centric. And that pivot is now validated by the S&P 500 inclusion. By embedding Bitcoin at its core, Block's culture drives internal alignment and positions it as a bellwether for index investing, introducing Bitcoin's growth potential to passive portfolios.
That deep integration helps us grasp Block's unconventional business model. It's essentially a digital toolbox for money movement, combining Square for merchants with Cash App for individuals, including Bitcoin access.
It's crucial to grasp that dual nature. Think of it like a neighborhood card reader merging with a smartphone bank that also offers direct Bitcoin access, designed for intuitive use but layered with technical depth.
And the Bitcoin native complexity is where it gets really interesting.
Exactly. Block doesn't just facilitate Bitcoin transactions. It holds Bitcoin on its balance sheet around 8,000 BTC as of late 2024. It actively mines Bitcoin with custom hardware. And importantly, it empowers users to securely trade and store it.
It's like a bank that also runs gold mines and sells gold bars directly.
That's a good analogy. This dual-role fintech innovator and staunch Bitcoin advocate adds depth and a unique risk-reward profile. And now, with S&P 500 entry, understanding this structure is vital for you, the investor, considering how Bitcoin's volatility might ripple through your index funds.
So how does this unique blend fuel their actual products and services?
It fuels innovation across the board, showing impressive product-market fit. At the foundation, Square offers tools for merchants, POS hardware, invoicing, loans. Then there's Cash App, hugely popular for P2P transfers, banking, investing, with over 50 million monthly active users. And Afterpay adds the buy now, pay later dimension.
But the Bitcoin-specific products are the real differentiators.
Absolutely. Cash App's low-fee Bitcoin trading generated billions in revenue. BitKey, the self-custody hardware wallet launched in 2023, addresses secure storage. And looking ahead, Proto, their mining system with advanced 3-nanometer chips rolled out in 2025, targets efficient mining. The fit is strong. Cash App's Bitcoin features drove 40% of Block's revenue in 2024. Users embrace it for remittances, investments.
What about the future roadmap? More Bitcoin integration?
Definitely. 2025 launches include direct Bitcoin payments on Square terminals, letting merchants seamlessly accept it, plus expanded mining hardware partnerships. Early 2025 data suggests these options are boosting merchant adoption by 15%, enhancing ecosystem scalability.
And for institutions?
Block provides novel Bitcoin treasury tools, open-source dashboards, APIs for pricing and management. These aren't available from traditional banks and underscore Block's distinct Bitcoin native edge. Its S&P inclusion becomes a unique gateway for index investors to get indirect Bitcoin exposure.
So what truly sets Block apart is this deep integration. Bitcoin isn't just an add-on.
It was foundational. It aligns Dorsey's passion for economic freedom via Bitcoin with their core competencies. Seamless payments, recurring fees, plus strategic Bitcoin gains. Unlike, say, PayPal, Block sees Bitcoin as central. They hold it, build mining tech, reinvest profits into buying more.
You mentioned a flywheel effect. How does that work?
Square empowers merchants, attracting consumers to Cash App. Bitcoin threads through both, creating a loop where user growth amplifies value. Look at 2024's Bitcoin surge. Cash App's BTC trading hit $10 billion quarterly. That directly lifted Block's overall revenue by 25%, even if traditional payment volumes were flat.
So conviction meets proficiency.
Exactly. It establishes a formidable moat. As Block joins the S&P, this model could normalize Bitcoin in blue-chip indexes, drawing passive capital and showing how Bitcoin-native firms drive innovation traditional companies struggle to replicate.
Block's track record of adaptation is also impressive. From Square in 2009 to the Block rebrand in 2021.
It's a narrative of continuous reinvention. Key milestones. 2013 Cash App debut, now processing huge volumes. 2020 strategic $50 Bitcoin investment, which saw remarkable appreciation. The 2022 Afterpay acquisition added BNPL scale, and the 2025 mining chip rollout coincided perfectly with Bitcoin's rally. Impeccable timing.
They've shown resilience, too. Through the pandemic, the crypto winter.
Remarkable resilience. During the pandemic, they boosted online tools, gaining 20% market share in U.S. digital wallets. Amidst the 2023 crypto winter, they launched BitKey, showing long-term commitment despite headwinds.
And the numbers back it up.
They do. Revenue soared from $17.6 billion in 2022 to $24.1 billion in 2024, 37% growth. Bitcoin contributed $9.5 billion in 2024 sales. This consistent adaptation culminates in the S&P 500 entry. It's validation that Bitcoin-native strategies can achieve blue-chip status, potentially inspiring you, the index investor, to embrace Bitcoin's potential within your portfolio.
That track record isn't accidental. It must stem from how they operate. What about their operational setup, especially that global distributed approach?
Right. Their operational strength starts with a global footprint across 95 countries and, significantly, no formal HQ since 2021, a truly distributed model.
But they still have key hubs.
Yes, San Francisco for engineering, New York for finance Cash App, Atlanta for support, Melbourne integrating Afterpay, Toronto for AI, and for mining, strategic partnerships like with Core Scientific in Texas. This flexible, lean setup for over 11,000 employees is crucial for agility in volatile Bitcoin markets. S&P inclusion amplifies this global reach, boosting international investor interest and underscoring their operational maturity.
What about vertical integration? How much do they control in-house?
They practice what we call moderate vertical integration. They control key software like Cash App and Square, and specialized hardware like BitKey and mining chips. But they partner for large-scale manufacturing and blockchain networks.
Like the 3-nanometer mining chips.
Exactly. Designed in-house, rolled out in 2025, aiming for 35% efficiency gains, reducing costs. This control improves the customer experience, too. Merchants using Square get end-to-end Bitcoin payment solutions, potentially reducing fees by 20% compared to rivals.
How does that compare to peers like PayPal?
Compared to PayPal, which lacks crypto hardware ownership, Block's approach mitigates supply chain risks. While outsourcing chip fabrication exposes them to some vulnerabilities like shortages, their overall strategy boosts efficiency, quality control, and strengthens their moat. In the S&P 500 context, this integration introduces Bitcoin native resilience, potentially mitigating some volatility for passive investors.
And their distribution model, how do they reach customers?
It's a powerful hybrid. Direct-to-consumer via apps like Cash App, surpassing 100 million downloads. Direct online sales for hardware like BitKey. And then strategic partnerships, like with Starbucks for Square POS.
Any innovative twists?
Yes, integrating the Bitcoin Lightning Network for instant low-cost transactions. That's quite ahead of the curve. This model scales effectively digitally. Cash App's viral referrals drive 25% YoY user growth. Creative engagement like Bitcoin rewards boosts usage.
Any real-world examples of scalability?
The 2025 Vegas Strip Bitcoin checkout pilot saw 30% uptake among attendees using Bitcoin for everyday purchases. Their global expansion, like integrating Afterpay in Australia, drove a 15% revenue lift. Now in the S&P, this robust model can funnel Bitcoin adoption into mainstream investing via index funds.
Let's talk revenue predictability. How stable is their income?
It's a well-balanced mix. Around 40% is recurring from transaction fees, Square's 2.6%. Cash App subscriptions plus long-term merchant contracts providing consistent cash flow.
But Bitcoin trading adds variability.
It does. In 2024, $9.5 billion came from Bitcoin sales, fluctuating with prices. But here's the key. Their significant Bitcoin holdings also provide asset appreciation, acting as a dynamic reserve cushioning downturns.
How has that played out quantitatively?
Recurring gross profit hit an impressive 60% in 2024, up from 50% in 2022. That provides substantial stability, buffering crypto market swings. Multi-year deals with enterprises like Starbucks ensure steady flows, Afterpay locks in future payments.
So it's a hybrid model balancing predictability and Bitcoin's potential.
Precisely. Predictable fintech fees balance Bitcoin's variability. For the S&P 500, this makes Block a compelling bridge for index investors to gain Bitcoin exposure without direct purchase, potentially smoothing overall index performance.
Those operational strengths paint a clear picture, but what really sets them apart competitively? You mentioned near monopolistic characteristics.
Yes, in Bitcoin integrated payments, Block holds significant sway. 30% of the U.S. small business POS market, 50 million Cash App users. That scale creates formidable barriers. Think regulatory hurdles licenses in 49 states deter new entrants.
And that protects their profitability.
It provides a strong moat, evidenced by their 4% net margins in 2024, despite competition. They process over $200 billion annually, dwarfing startups. S&P entry cements this advantage, signaling that Bitcoin native dominance can yield stable, dynamic returns.
How do economies of scale factor in?
Larger volumes reduce per transaction costs. With $24 billion revenue, they can invest heavily in R&D, like custom mining chips, 35% cheaper per unit. Cash App's 50 million users spread fixed tech costs, leading to 25% margin expansion. Compared to smaller rivals, scale drives superior efficiency. In the S&P, this could amplify index growth by tempering some Bitcoin risk.
And network effects, more users attracting more users.
Powerful network effects. More Square merchants attract Cash App users, fueling Bitcoin trading growth. 10 million Bitcoin buyers on Cash App in 2024, up 50% UI. Social features like boost rewards create feedback loops. Data shows user growth strongly correlates with a 40% revenue rise. This is pronounced in Bitcoin ecosystems. As an S&P entrant, Block introduces network-driven Bitcoin growth to major indexes.
You also mentioned counter-positioning. How do they differentiate?
By deeply embedding Bitcoin trading, mining hardware, self-custody wallets like BitKey. Features rivals like Venmo often avoid due to regulatory concerns or lack of conviction. Block's focus on self-custody appeals to privacy-conscious users, a 20% user uptick in 2025. This differentiation is hard to replicate, making its S&P inclusion a nod to genuine Bitcoin-native innovation.
Do high switching costs also play a role?
Exceptionally high. Merchants invested in Square hardware face migration hurdles. Cash App users lose integrated Bitcoin portfolios. This results in an impressive 80% retention rate, vital for stability in volatile markets. For the S&P, it guarantees consistent contributions, buffering against market churn.
What about brand power?
Formidable. Synonymous with innovation under Dorsey, fostering loyalty. Cash App's trust allows premium Bitcoin fees. They raised rates in 2024 without backlash, thanks to quality and 99.9% uptime. The economic empowerment narrative creates an emotional connection. As an S&P member, this brand elevates the index's modernity, attracting younger investors.
And cornered resources, unique assets.
They attract top Bitcoin talent, like from the Spiral team. Proprietary infrastructure, custom mining chips, partnerships like Core Scientific, patents on Bitcoin payment integrations. Dorsey's vision attracts top engineers. These resources, including their 8,000 BTC holdings, provide distinct edges. S&P entry highlights these unique assets, potentially driving asymmetric gains for index investors.
What about process power? Operational efficiency.
Evident in refined procedures like AI-driven fraud detection reducing chargebacks by 50%. Sophisticated Bitcoin treasury operations using open-source tools for efficiency and transparency. These processes are hard to copy, built over years. This operational power enhances quality, builds trust crucial for a Bitcoin-native firm. Within the S&P, it means sustained profitability and resilience.
They also seem to have a clear technological edge.
Superior proprietary tech, 3nm mining chips, 35% more efficient. Bitkey secure wallet, 10x safer via multi-sig tech. Their goal isn't just incremental improvement, it's making Bitcoin accessibility profoundly better, like Cash App's instant buys versus competitors' delays. This leadership solidifies their moats. For the S&P, their tech introduces high growth potential.
Their timing has certainly been noteworthy, too.
Impeccable. The 2020 Bitcoin investment before a major bull run. Mining entry during the 2024-2025 hash rate boom. First mover in consumer Bitcoin trading, capitalizing on ETF approvals. They avoided pitfalls faced by earlier entrants. As the S&P's Bitcoin pioneer, Block's timing aligns perfectly with Bitcoin's institutional surge.
And finally, speed of execution.
Exceptional. Launched Bitcoin payments on Square terminals in months in 2025, outpacing rivals. Supply chain optimizations enabled rapid mining scaling. Quick Cash App integrations after 2024 ETF approvals boosted volume 30%. This agility discourages competitors and is vital in a fast-evolving market. In the S&P, it ensures rapid adaptation, benefiting the index's stability and growth.
Are these advantages truly sustainable long-term?
Fundamentally, yes. Rooted in Bitcoin's secular rise projections of $1 in BTC by 2030 due to scarcity and adoption. Block's brand and processes endure through innovation.
But what about potential risks, erosion?
We must acknowledge them.
Yeah.
New entrants could try to erode network effects. Theoretical tech shifts like quantum computing pose distant threats to Bitcoin's security. Regulatory bans on corporate Bitcoin holdings could impact their treasury. Bitcoin price crashes affect treasury value, but Block's diversified fintech revenues mitigate this. S&P status likely strengthens their position via capital inflows and credibility, though it also increases scrutiny.
That's a comprehensive look at their advantages. How does Block approach growth and expansion? What's their blueprint?
It rests on several pillars. Market penetration, a 10% YoY goal for Square merchants. Market development, introducing Bitcoin features into new geographies like Latin America, Africa, and robust product development. 2025 mining expansions, BNPL enhancements.
What mechanisms do they use?
Leveraging Cash App for cross-sells Cash App Borrow grew 20% in 2024. Strategic M&A like Afterpay for Scale. And crucially, their unique Bitcoin treasury reinvestment strategy. 10% of Bitcoin profits plowed back into buying more Bitcoin, fueling organic growth. S&P entry acts as a catalyst, drawing funds to amplify this expansion.
The growth potential seems immense. Where are the biggest opportunities?
New markets like Africa via mobile Bitcoin. New products like enterprise Bitcoin treasury tools. Potential M&A of promising Bitcoin startups. Regulatory hurdles exist, but the target is over 15% gross profit growth. You could draw parallels to Amazon's AWS pivot. Block's mining could see explosive growth.
Can we quantify the total addressable market?
It's vast and diversified. Roughly $150 B global payments, $100 plus Bitcoin economy, trading, mining, $60 US fintech, $40 BNPL, and $50 Bitcoin services, that last one growing 30% annually, projected to hit $200 by 2030. Block aims for larger slices, especially via mining, targeting additional $20 B TAM. Their Bitcoin focus lets them tap these expanding segments.
Their products seem applicable across many areas.
Very broad applications. Square for retail commerce. Cash App for personal finance Bitcoin across demographics. Mining relevant to energy tech industries. Highly scalable from small vendors to institutions needing Bitcoin treasury solutions. Their self-custody niche broadens reach. With Block and the S&P, these applications introduce diversified Bitcoin utility to indexes.
How resilient is their operation, thinking about supply chains and longevity?
Diverse supply chain. Partners in US Asia for hardware, multiple fabs for chips, mitigate reliance. AWS redundancy ensures uptime. Vulnerable to chip shortages, yes, but mitigated by in-house design and 2025 packs with US miners. Bitcoin native aspect adds resilience via decentralization. S&P status improves access to partners and capital.
Customer diversity also seems key to stability.
Absolutely. Small merchants to large enterprises. Consumers, especially the 1834 demo via Cash App. institutions needing Bitcoin tools, geographically diverse 50% US, 20% Australia, across industries. Over 80 million users provide a buffer against downturns. S&P entry further diversifies their investor base.
What about product longevity? Can they weather market downturns?
Products centered on Bitcoin are projected to endure 80% probability. Bitcoin as digital gold, an inflation hedge, aligns with a digitized economy. Can they weather downturns? Emphatically yes. Diversified fintech revenue buffers Bitcoin crashes, proven during the 2022 crypto winter. Secular trends like Bitcoin adoption, 1B users by 2030, and fintech growth, 15% annually, are strong tailwinds. S&P inclusion ensures longevity within indexes, exposing passive investors to these trends.
So summing up growth, what are the key drivers and main risks?
Key drivers: Bitcoin price appreciation impacting treasury, user acquisition, cash out 15% DOY, product innovation, mining revenue, economic recovery boosting volumes. Bitcoin focus amplifies these. Main risks: market saturation of U.S. payments, competition, Coinbase, PayPal, and Bitcoin. Bitcoin volatility impacting revenue, unfavorable regulation stifling adoption. S&P entry mitigates some risks but heightened scrutiny.
It's clear Block operates strategically, but it faces macroeconomic headwinds like any company. How do these interact with their unique model? Let's start with interest rates.
Interest rates matter. Rising rates in 2024-25 increase borrowing costs on their $5 debt, squeezing margins maybe 2%. But low leverage, debt to equity 0.3, and cash reserves buffer this. Lower rates could boost lending products like Afterpay.
And the Bitcoin angle.
Interesting twist. High traditional rates can sometimes favor Bitcoin as a decentralized hedge, indirectly aiding Block if people seek alternatives.
What about global trade and inflation?
Trade tensions can disrupt hardware supply, chips from Taiwan, but diversified partners mitigate this. Expansion into trade-heavy markets boosts Bitcoin remittances via Cash App. S&P's status subtly enhances trade resilience. Inflation can squeeze consumer spending, a 5% hit on volumes in 2024, yet Bitcoin's hedge narrative helps offset this. Their holdings appreciated significantly during high inflation, cushioning financials and maintaining 4% margins via efficiencies.
Any company-specific macro influences Bitcoin's halving cycle?
Absolutely vital. The halving cycle, a programmed supply shock, impacts price. The 2024 halving boosted prices 50%, lifting Block's revenue and treasury value. Similar impact expected in 2028. Regulatory shifts, U.S. Bitcoin laws post-election, are both risks and opportunities. Economic slowdowns test treasury volatility, but S&P inclusion signals macro validation for Bitcoin in portfolios, even amidst that volatility.
Let's unpack the raw numbers that got Block into the S&P 500. Revenue growth seems explosive.
Impressive, yes. $24.1 billion in 2024, up 10% YoY from $21.9 billion in 2023, driven significantly by Bitcoin sales, $9.5 billion, up 25%. This mirrors the Bitcoin native strategy key to its S&P eligibility.
And profit margins?
Gross margin hit 35% in 2024, up from 32%. Net at 4%, $2.09 BS income. Reflects efficient cost management like scaling mining without ballooning expenses, transforming Bitcoin investments into profitable engines.
What about the rule of 40?
Hits 45%, 10% revenue growth, plus 35% EBITDA margin. For you, the investor, this signals Block is balancing expansion with strong financial health, ideal for the S&P's mix.
Return on invested capital, ROIC?
A robust 15% in 2024, showcases smart capital allocation. Their Bitcoin investments alone yielded 200% returns over the holding period. Underscores leadership's strategic brilliance, key for long-term sustainability.
Cash and debt position?
Strong. Current ratio 2.0, $10 per cash. Low debt to equity of 0.3, responsible management. And importantly, Bitcoin holdings, $1 plus value, act as dynamic cash equivalents, providing flexibility.
Book value and free cash flow.
Book value up 20% to $21 in 2024, driven by retained earnings and Bitcoin appreciation like a hidden treasure compounding value. Free cash flow hit $2 in 2024, up 30% YoY, providing capital for buybacks or more Bitcoin purchases. Funds the vision, engages investors.
Any key Bitcoin-specific metrics?
Around 8,000 BTC held, $800 at $100 KBTC. Treasury yield 150% since 2020. Gross payment volume 220 Bs, up 12%. Bitcoin revenue per user, $200, up 20%. And a Bitcoin conversion rate showing 10% of Cash App users actively trade Bitcoin, highlighting engagement.
How does Block stack up against peers like PayPal or Coinbase?
Its unique position is clear. Versus PayPal, Block has higher free cash flow, more diversified fintech base, better ROIC, 15% versus 12%, though PayPal has higher net margins, 15% says 4%, and slightly lower revenue growth, 8% says 10%, versus Coinbase. Block's diversified operations offer more stability than Coinbase's often volatile Bitcoin revenue and lower ROIC 10%. Block has more depth than Shopify, 0.3 versus 0.1 DE, but overall health is robust.
And compared to Bitcoin treasury peers like MicroStrategy?
MicroStrategy holds more Bitcoin but lacks Block's operational diversity and revenue streams. Block offers a far more balanced investment proposition.
What are the overall financial trends?
2022-2024 shows consistent efficiency gains amid Bitcoin integration. Revenue up 37%, margins expanded 10 points, ROIC from 5% to 15%. Implies likely acceleration with S&P inflows, though Bitcoin volatility remains a factor. Trends suggest Block could sustain 15% plus growth if Bitcoin prices continue upward.
That gives us a solid foundation. Let's focus on the present moment. Recent developments, market narratives. The S&P 500 edition itself is huge news.
Absolutely. July 23, 2025. Sparked that immediate 10% stock pop, replacing Hess. A major validation for Bitcoin-native strategies in mainstream finance.
What else is happening or upcoming?
We're watching for Q2 2025 earnings in late July, could show a Bitcoin boost from recent price surges. The upcoming Bitcoin 2025 conference might feature block mining updates. And externally, potential U.S. Bitcoin regulations post-election are key. Investors want continued Bitcoin revenue growth, around 40% target, and treasury expansion. Positives for growth, but risks if regs tighten or sentiment shifts.
What's the current narrative among individual investors?
Overwhelmingly positive on S&P entry, based on online discussions. Around 70% bullish, seeing it as Bitcoin's mainstream breakthrough. Primary concerns are volatility from BTC holdings. My 401k now rides Bitcoin waves, exciting but scary, is a common sentiment paraphrased. Leadership focus under Dorsey is largely praised. Jack's Bitcoin vision finally pays off.
What are the key priorities?
Continued Cash App growth and mining profitability. The dominant narrative is innovation leader, strong financials, undervalued at $80 with BTC upside. Some neutral views express concern about over-reliance. If BTC tanks, S&P might regret this.
Any specific examples from discussions?
Threads on the Bitcoin Treasury edge. This changes index investing forever. Excitement over reinvesting 10% of Bitcoin profits back into Bitcoin. Optimistic overall, but with awareness of volatility and the need for broad growth.
The market is definitely buzzing. Let's talk valuation. Block's trading around $80 per share as of Q3 2025. How does the concept of margin of safety apply here?
It's vital. Buying below perceived intrinsic value, maybe a 30% discount, provides a buffer against errors or downturns, especially crucial for Bitcoin-native firms due to volatility. For you, the investor, it minimizes potential losses and maximizes upside in dynamic markets.
Why does valuation matter so much?
It guides investment decisions, prevents exposure to bubbles, identifies bargains. For management, it informs buybacks. For investors, it dictates entry-exit points. In the S&P context, proper valuation ensures indexes reflect true worth, not hype, promoting long-term stability.
How do you value a Bitcoin-native company like Block? What methods work best?
A nuanced approach is needed. Intrinsic valuation via discounted cash flow, DCF, modeling future cash flows, discounting at 10% WACC, projecting 15% growth yields roughly $120 intrinsic value per share. Relative valuation. PE is 25x versus peers around 20x. EBITDA is 15x. Advanced methods like sum of the parts. Valuing the fintech segment, $50 separately from Bitcoin holdings mark to market, $1.
Are there novel methods for the Bitcoin treasury part?
Yes. Net asset value, NAV adjustment, adding Bitcoin's market value to net assets, then adjusting for volatility using options pricing models, or Bitcoin adjusted enterprise value, treating holdings as a perpetual growth asset, maybe 20% CAGR, reflecting long-term potential.
So which approach is best for Block?
A hybrid DCF incorporating Bitcoin sensitivity analysis seems most effective. Factoring the treasury as potentially a 10x lever on Bitcoin prices captures the dynamic nature best.
Let's steelman both the bear and bull thesis. What are the core arguments against Block?
The bear thesis. Institutions worry about a high PE, 30x, ignoring recession risks. A Bitcoin crash could wipe out 20% revenue, citing the 2022 drop. Debt burdens and high rates, competition from PayPal eroding moats. Retail concerns often echo is Q2 Bitcoin dependent, S&P ad is hype crash incoming if regs hit. Summary. Over-reliance on volatile asset, slowing growth from 30% past to 10% projected, leadership distractions.
And the bull thesis, the strong arguments for Block.
The bull thesis. Institutions see it undervalued at $80, DCF points to $120 plus. Bitcoin Treasury is a free call option with 200% return so far. S&P inflows adding $5 demand. Strong 15% growth projected from mining afterpay. Retail sentiment is often Bitcoin bull run plus S&P moonshot, Dorsey genius, Cash App unstoppable. Summary, network effects scale, secular Bitcoin trends, ETFs boost, resilient financials position it for 50% plus upside.
Which outlook seems most probable right now?
Given Bitcoin's 2025 rally, S&P validation, and strong metrics, the bull thesis seems more probable. Current market trends favor growth and innovation over the highlighted risks. Based on today's $80 price, Block appears to trade at a discount maybe 30% to an intrinsic value around $115, factoring BTC at $100K. This presents a compelling buying opportunity for you, the individual investor, looking for an edge in this unique S&P play.
So bringing us back to our initial question, what are the profound implications of Block's S&P 500 entry for Bitcoin and your index investing?
The implications are truly seismic. Block, as the first genuinely Bitcoin-native company in the index, deeply integrated via holdings product strategy. Its entry unequivocally legitimizes Bitcoin as a corporate asset class.
And that forces passive funds.
Exactly. It forces trillions in passive index funds to allocate to a Bitcoin-exposed stock. We're talking potentially billions in passive buying pressure, lifting Block stock 10–20% short-term for Block itself. Enhanced credibility, lower capital costs, accelerated growth. It validates Dorsey's vision, attracts talent, amplifies Bitcoin initiatives like mining.
What does this mean for the S&P 500 and index investing overall?
It fundamentally shatters the wall between established finance and the Bitcoin economy. It introduces Bitcoin's asymmetry high upside, yes, but also volatility into safe benchmarks. Index investing built on diversification now gains indirect but tangible Bitcoin exposure without active choice. This signals Bitcoin's maturation, potentially sparking more Bitcoin-native inclusions, reshaping portfolios for generations.
What are the key truths investors should grasp for outperformance in this landscape?
Bitcoin's anti-inflation properties, its finite supply, offers significant asymmetric upside. Block's holdings could genuinely 10x if Bitcoin adoption hits just 10% of global reserves, which seems plausible. Also, Block's strategic mining position allows energy arbitrage. Cheap power equals profits, a sustainable edge.
We also need to address risks, known and unknown.
We do. Known unknowns include regulatory changes like potential U.S. bans on corporate Bitcoin holdings, low probability but worth monitoring. Unknown unknowns are unpredictable black swans, like a disruptive altcoin overtaking Bitcoin.
How can listeners gain an edge?
Track Bitcoin's halving cycles for potential timing insights historically significant. And dig into Dorsey's open-source ethos in company filings. It often hints at undervalued IP or strategic details others miss, especially regarding their Bitcoin treasury.
So, a final provocative thought.
As Block pioneers this intersection of traditional finance and the Bitcoin economy within the S&P 500, what will you explore next in your own portfolio, now that the future of money is being redefined right before your eyes?
Thank you for joining us on this exploration into Block's groundbreaking S&P 500 inclusion. We hope this discussion has illuminated the profound implications for your portfolio and the future of money itself. Keep asking questions, keep learning, and consider the powerful shifts unfolding. Until next time, stay well-informed and curious.
Love this? Drop a like, subscribe, and ring a bell so you never miss a podcast.